Oil prices are slightly recovering after hitting a 6-month low as a larger than expected drop in US oil and gasoline stocks reminded investors that demand remains firm, even if overshadowed by the prospect of a global recession. Investors are also awaiting clarity on talks to revive the 2015 Iran nuclear deal. Oil supply could rise if Iran and the United States accept a proposal from the European Union, which would remove sanctions on Iranian oil exports. The EU and the United States have said they are studying Iran's response to what the EU has called its final proposal to save the 2015 nuclear deal after Tehran called on Washington to show flexibility. For more on this now, let's bring in Susannah Streeter, who is an investment analyst at Hargreaves Landsdown in Bristol. Susannah, thank you for being with us today. First of all, what's the likelihood that this revival really will go ahead? And what would happen if an agreement weren't reached, on the other hand?
Well, okay, let's look at it from the European side. Certainly the EU is really pushing for this because of the energy crisis looming in Europe as that deadline approaches for sanctions on Russian oil, Russian crude by the end of the year. So it certainly would welcome this extra source of oil from Iran. And that is why I think you're seeing a big push from the European side to try and get this deal over the line, because if it does, could potentially see Iranian oil flood the market around 1.3 million barrels of oil per day, up to 2.5. So certainly would help bring down prices further and ease those super high prices that consumers and companies have had to get used to. On the other hand, of course, we've got the US midterm elections looming in November. I doubt that the US would really want the Iranian question to be looming large, because I think this deal would be largely unpopular, particularly given how close Iran has become with Russia since the invasion of Ukraine. They've certainly been cooperating more, not exactly bedfellows, but certainly cooperating more than they have. Obviously, leaders met at a summit a short time ago. So I think because of that, because of the midterms looming, it's unlikely you'll see a deal pushed over the line before November.
Right, Susannah, and I wonder if markets were to be flooded by Iranian supply, and all this would be coupled with the prospects, and not just the prospects, of real global recession, then what would the trajectory of these oil prices be then?
Well, certainly it would be expected to push down the price of oil pretty significantly back below levels that we saw oil at, crude at, before the invasion of Ukraine, so below $80 a barrel for a barrel of Brent crude. And as you say, we still have got downwards pressure on crude because of worries about a looming global recession. But we still do, of course, have supply constraints, expectation that demand for crude will rise. And what we're seeing at the moment is that the price of crude futures is extremely volatile. Speculators have left the market, so you're seeing these pretty wild intraday swings. And because of that volatility, it is likely to lead to a drop in capital expenditure, or certainly not an increase in capital expenditure, because producers will be hesitant to spend more to increase supply when the price is so volatile. For example, it could fall back to levels where that increase in expenditure just isn't viable. So I think for now, certainly there'll be a holding off of increased production, and at the same time as well, energy majors have got to transition to greener, cleaner forms of energy, and that's also likely to delay much more investment into expansion.
Susannah Streeter, many thanks for this interesting update.